Hey y'all, Zach McDonald, your real estate agent with Real Property Associates. And in this video, I'm gonna share with you 4 reasons I don't think the housing market is going to crash. Many people, including some of you, have been asking me, what the heck's going on in the housing market? It's clearly shifting a little bit and moving a little bit. But I think the fear and the concern is that the housing market is going to repeat 2008 to 12, that time period here again, sometime soon, or it could, which is always a possibility. But I think the fear right now is that that's a catastrophic event that we had in the housing market, the crisis there starting in 2008 with the mortgage, the subprime mortgages, and there's just a lot of fear. So I wanted to share 4 thoughts with you here and 4 reasons really as an argument why I think that we're not going to repeat the 2008 to 12 time period here anytime soon. So without further ado, I'm going to jump into these points, and then I'm going to share a little bit here at the end of the video about what typically happens in the housing market during a recession. The most recent housing market collapse, at least the one that most people think about, is from the 2008 to 12 time period. And in Seattle, we saw housing prices go from a median sales price of $498 at the time down to $342,000. In January 2012, homes in Seattle, the median sales price was 45.6% less than it was in July 2007. So in people's minds, they're waiting for this opportunity maybe to time the market, buy a house when the market does some kind of a similar type of correction. And I mentioned that in this video, we're gonna talk about 4 reasons that I don't think we're gonna see that dramatic of an adjustment to the housing prices. The first reason I don't think we're headed towards an epic housing market collapse is that foreclosure activity is at an all-time low. So if we're looking at foreclosure activity in the United States, 2005, and I'm showing you this graph here, so we'll put that up here on the screen for you. And if we look at that activity, we're seeing a pretty steady climb, 2007, 8, 9, 10, 11. It's kind of scary when you look at the graph here. But you'll notice as we go down this graph in recent years, even starting in 2007, 18, 19, we're seeing those numbers go down. And the last few years, all-time low foreclosure activity. I will preface it because some of you might start commenting that we had the restrictions on evicting people and foreclosing on people for not paying. So yes, that's been part of it as well. But even the previous couple years were still significantly lower than where we were at previous to the housing market collapse. So that's an encouragement, right? Less foreclosures. And the second reason why I think we're not headed towards an epic collapse in the housing market is that we have better borrowers. The first part here, and this is the graph here I'm showing you, we see that there are a lot of borrowers with not very good credit scores getting into houses. So you're seeing the volume of loans in billions of dollars here, 2003, 4, 5, 6, 7, right? Leading up to this collapse, there's a lot of people getting loans that shouldn't have been getting loans. And if we look at the more recent years, not only did we have the better borrowers here with higher credit scores, so we have $50 billion of loans with sub 620 credit scores versus $350 billion of loans. Okay, that's significantly different. But we also have all these new laws and rules and overlays on top. And there are a lot of requirements for getting these loans. So credit score is just a piece, but we have buyers that are qualified on income, assets as well at a higher level of verification. So we have better borrowers purchasing houses. And I'll say as a side note, this is adjusted a little bit, but most recently there was a CoreLogic study on home equity, and buyers had an all-time high of equity in their homes. And that means that even if the market adjusts, they're not going to be in a position where they need to just maybe walk away from their house like they were doing back in the housing crisis. Now, again, those numbers are a little outdated, so there's not probably quite as much equity in homes as we've seen housing prices and values start to adjust a little bit on the downward angle. But again, we're still seeing homeowners with a lot of equity in their homes, and we're still near those record high levels. So we have borrowers that can afford the payments. We have borrowers that are showing a track record of success making those payments. And then we're also seeing homeowners that are currently in their homes having a lot of equity, so they're not needing to walk away from their houses, right? That's all point number 2, better borrowers and owners. And the third point, the third reason that I think we're not headed towards an epic collapse in the housing market or a massive bubble burst is the housing shortage. So I'm going to show another graph here, and actually this isn't a graph, this is a little bit of an infographic. We've got the largest demographic of homebuyers ever coming into the housing market, and that's the millennials and the Gen Zs. So we've got people, 140 million coming into, projected at least, coming into buying their first house. And we also have a lot of millennials getting into that older millennial group, and they're now about to outnumber the baby boomers. That's crazy. So we have the largest generation of homebuyers ever. And that's coupled with, now we are starting to see the highest number of new construction since 2006. And I point that out because it's important, because the point is, since the housing market collapsed, we have not been building enough houses. So that's going to be point number 4. And point number 4 here is that we have not been building enough houses. New construction is way behind. So this last graph here, this is homes built by decade in the US since the 1930s. If we look at this, there's a huge boom and spike, right, in new construction. We started around 5.4 million in the 30s by the decade, and we're jumping up into the 20 to 25, 26, 27, right, and leading up to the housing market collapse, we're up at 27.1 million new construction homes in the country. And in the last decade, from 2010 to 20, 5.8 million, all right? So we're back to the 1930s numbers, new construction. But we just talked about how we have the largest demographic of home buyers and the next largest one coming right behind it. And we haven't been building enough houses. So over the last 7, 8, 10 years, we've been talking about and watching the market going up, especially in the Seattle area. And there's been an inventory shortage, not enough houses for buyers. And we keep talking about supply and demand and how we just don't have enough houses for all the buyers. But when we start to think about, okay, well, there's all these new people that are being born, there's all these new people moving to the area, and especially in areas like Seattle where there's been a lot of net migration, right? People moving into the area. There's not enough houses. They're not building enough houses nationally and locally. And so what happens is everybody's fighting over the same houses. And you can't just all of a sudden have enough houses for everybody. It doesn't work like that. It's going to take years and years and years of building and construction to make any kind of dent in this. So if you think about the car market right now, if you've tried to buy a car recently, we're having supply issues, inventory issues, and we're starting to see this in other parts of the economy. And a lot of that was related to COVID and shutdowns. Well, that's what happened in the construction business for 10 years when we had the housing crisis, because nobody wanted to loan money. People were scared. Builders couldn't get the money. Builders weren't building. That's why we have so many less new construction homes. And so now we're seeing builders building houses, right? Getting money, building houses, trying to catch up, but you can't. So it's the same thing that's happening in other areas of the economy right now on a smaller scale. They're going to bounce back hopefully quicker. But I know people trying to buy a car now, and they still have to wait months and months and months, and they're like, I sure hope I get one, and I'm going to overpay for it. So in the housing market, we still have this issue. So I think right now there's a lot of fear about recession, and the stock market, we're at the beginning of a recession. The stock market's been having a terrible year so far since January, and the housing market is now starting to shift. We're starting to see interest rates get up over 6% now. I went for a hike. I summited Mount Baker. It's more than a hike. It's like climbing a mountain over the weekend. I come back, and over 2 days, we saw a massive spike in interest rates, right? Over fear of inflation and inflation numbers. So right now, we got a lot of fear in the market. So the stock market's doing bad. The mortgage interest rates are now going up more. And we're seeing, not that there's all of a sudden more houses, right? It's not like there's not more houses coming on the market or available than there normally are. It's just less people that are interested because they're afraid, and interest rates are high. So affordability is impacted, and then there's fear. Once that's removed, once interest rates go back down, maybe that's 5 months from now, 6 months from now, a year from now, we're going to see everything take back off, because housing prices are going to be maybe down a little bit. You're going to have interest rates back into a place where buyers feel confident again in purchasing. And once you slow the economy down, which the government's been trying to do, you got to speed it back up and you got to stimulate it again. So we are in a spot where I think there's an opportunity for buyers, and it's starting now. We don't know if this is what it's going, like this is the worst part, or if it's going to get a little bit worse. Nobody really knows exactly how long it lasts or what it's going to look like. But as far as like a massive just foreclosure boom again, and nobody, being able to buy a house for years, and that's not what it looks like. It's a completely different situation. Back then you have so many houses that are being built, and now nobody wants to buy it. We just haven't had the construction either. So once that fear goes away, I think we jump right back to it. In 2018 to 19, we had a little bit of the same type of deal. We saw housing prices adjust in that 15 to 20% range for about a year. So from May to May, right, 2018 to 19, home prices were almost the same. There was a dip in between that. And even into 2020, it was very similar. But that's typically what happens during a recession. And technically, we did have a recession in the housing market, 2 quarters in a row backwards. So what typically happens in a recession, and I'll show you this last graph, I think this will be helpful. If we look at Case-Shiller's data from the 60s, we've got a graph here, and it's showing us the years right on the left, and then you've got the market index and values on the right. And then the blue, darker blue vertical columns there are recessions that we've had in the economy. So we have in the 60s a recession, flat housing market, 70s, flat housing market, mid 70s, flat housing market, 80s, the housing market goes up, flattens out next time. And then you see housing market grows again, and then you see it goes flat in the 90s, and then it kind of remains flat for a little while, and then it takes off through a recession in the early 2000s, right? And then you have the massive one. It lasts for like 4 years. It does last for a while in the housing market. It lasts actually longer than in the stock market on this graph. And that's the one that's in everybody's mind. Like, when's that one going to happen? But historically speaking, the housing market doesn't react like that when there's a recession, unless, in this case, it was the housing market's fault, right? Bad loan practices, lots and lots of construction, speculation, but that's not where we find ourselves right now. So historically speaking, the housing market's more flat when there's a recession, and then it takes off again as we're looking at this data when interest rates get lower again and housing becomes even more affordable. So do I think that we're going to have a massive correction or crash in the housing market? No. Do I think we're in a place where housing prices are shifting a little bit? It's going to be a little bit easier for a buyer to get into a house. You don't have to compete maybe on multiple offer situations and pay over asking price. And maybe you can negotiate even a little bit lower prices. Yeah, I do. I think that's where we're finding ourselves now, and we're going to see ourselves here for the rest of the year most likely until inventory gets to a point where there's not enough houses again for all the buyers. But really, I don't think we're in a place where we need to hit the panic button. I think you're in a zone of opportunity as a buyer here over the next 6 to 8 months. So if I was a buyer right now, I'd be thinking about trying to take advantage of this. It's hard to time exactly if you're going to get the 10% discount or the 12% discount or maybe a 15%. But I think if you wait too long, you get to the point where interest rates are getting better and everybody's more confident, and all of a sudden all the buyers start coming back. So if I'm a buyer and I'm thinking about buying and I can buy, I'm starting to think, okay, I'm already going to be getting a benefit of not paying over asking price and competing. That's a huge benefit, right? I'm also probably going to be able to, if a house is sitting on the market for a few weeks and I don't go for everybody's favorite house, those are still selling over asking price, right? The average houses in Seattle area are still selling over asking price statistically, even with the market shifting. But if you're buying one of those houses that's not everybody's favorite in the best neighborhood, you're probably going to be able to maybe negotiate the price down a little bit. And then as the market picks back up, you're going to be in a good spot. I think another tip or tactic here is that you got to have the long-term horizon in view. So when there's a really hot market, people get trained poorly. They think it's like they treat housing like the stock market. You don't buy a house for a year and like flip a huge profit unless you are actually flipping houses, right? And you're getting a really good deal and you're fixing it up and adding a lot of value to it and selling it for a profit. unless you're doing that, you're not. Like flipping houses every year and a half is not a good way to make money. The housing market is historically appreciating at a lot slower rate than the stock market. So if you're looking to do day trading, right, that's what you do in the stock market, and I still think that's not the best way to do the stock market. But in the housing market, you're looking at a lot more stable investment, but it's really a place to live, right? You need housing, it's a place to live, and it's also a place to build wealth over time and see a gradual appreciation, but these huge spikes are not normal historically. So if you're in this place where you can commit 3 to 5 years to buy a house, even less, but let's say 3 to 5 years. I mean, our biggest, most scary housing market recession was 4 years, and then we started to see it go back up. And in Seattle, it quickly recovered. In some markets, it's still recovering. But I think that's where we got to have a level head. Like, okay, the worst case scenario in Seattle, we had $498 was the median sales price. It dips down over 4.5 years into the $342 range, and now we're talking about $1 million for a house in Seattle, less than 10 years later from the worst case, and maybe 14 years from the best case previously, still double what people paid for their houses and more. So I think that's what we got to have. We got to have that longer term horizon as an investor and as a homeowner. Again, stock market, housing market, any type of investing, typically and historically, slow and steady wins the race. So do I think we're in for a massive housing market correction? No. Is the market shifting? Yes. But I think those 4 points that we just talked about should help give a little bit of confidence and a little bit more context for what I think is actually going on in the housing market versus what maybe the media is sharing with you. Thanks so much for watching this video. If you got a lot of value out of this video, please give it a thumbs up. If you have questions or comments, please drop one down in the comment section. I'm happy to dialogue with you. And if you have other ideas or thoughts, I'm completely open to those. And I love it when people start to dialogue, especially when others engage with each other. And if you want to talk more specifically about your situation, if you're somebody's like, do I need to sell my house now all of a sudden? Or if you're maybe somebody who's thinking about buying a house and you're like, is this the right time? I mean, this video was helpful, but I'm still kind of like unsure, not sure what to do. I'd be happy to be a resource for you as well.